And then we go out in years, that's $22 million Bitcoin by this $5,000 drop. Has to be gross dollar terms, one of the biggest daily drops we've had. 95% of what Bitcoin does right now is relative to the power curve. The price right now has only been this low 30% of the time. By the end of the year, the trend will be growing at 42% a year. You cannot print Satoshis like you can print dollars. The whole game of credit could change. There is a noticeable jump in short-term UTXOs. You always see the price pump. This is where it would have to be something where like all your models break. Presumably it would break to the upside, but it might not be the world that we want.
Matthew Mežinskis, our pets' heads are falling off. Bitcoin down 6% today, sitting at $86,262. Is it over?
Marty, we've been through this before.
I know.
We need to step back, congratulate everyone who's listening for still having diamond hands. If you traded a little bit, congratulations even more. But life is good when you hold Bitcoin. Spend time with your family. Don't think about this too much. Although I haven't done, like I was telling you, I was even blissfully sleeping. Usually I'm blissfully sleeping during Twitter drama, primetime US Twitter drama over here in Europe. But I did want to check, and I didn't even check it. Like this $5,000 drop has to be not necessarily in percentage terms, but in gross dollar terms, one of the biggest, daily drops we've had.
Really? We're right back.
I don't know.
We're right back to where we were 7 days ago. We're actually up.
Yeah.
37 basis points since this time last week.
Yeah.
Depending on your time frame, it's either bullish or bearish. We did a nice little BART formation here on the chart between.
They get the old Simpsons.
Yeah. People are very worried, though. People are looking out there. They're saying, "Hey, cycle theory is broken." There's a lot of demand out there. There's a lot of buying, a lot of ETF inflows, but the price isn't moving. JP Morgan is manipulating the price of MicroStrategy's stock. There's Caitlin Long's out there saying there's price repression. What are you seeing, sir?
Well, on my streams, I try to do some deep dives on the price relative to other assets over a longer period of time. And with the theory being that, you can manipulate, if you want to use that word, manipulate or suppress markets, you can absolutely do that in the short term, maybe even the medium term, but it's very difficult to do that over the long term. I think that'd be most evidenced by gold, right? There's a lot of gold. Bitcoin conspiracies don't hold a candle to gold conspiracies, Alan Greenspan said in 1996 or so, central banks stand ready to sell gold should the price rise. And yet here we are, gold $4,000 an ounce. Now, a Bitcoiner wouldn't like that. Bitcoiners expect bigger moves faster. And we are indeed on a much faster growth trajectory than, the gold market. But, I think the market eventually gets that price, that buyers and sellers accurately reflects their, demand and supply. And I think will eventually sort itself out. But yeah, I envisioned doing my daily streams here. You've seen all my percentiles and running against the power curve. And I envisioned during exactly this time talking about, okay, so how many days have we been above the 80th percentile, 90th percentile, just preparing people that we could run, trying to stay calm. I like the phrase, my friend, he goes by APSK. He's a good power law, does a lot of charts on Twitter. He's like, you said Bitcoin would break all our models, but didn't expect that to be to the downside. So, we're going to have to see. But in general, we can look at the charts whenever you want. But I mean, in general, we're still on a power trend. Nothing is broken there. And as long as you understand that Bitcoin grows like a network, which obviously you talk to plenty of people who can reinforce that. Way different than any other traditional finance asset. I think you're going to be okay. And the best way to do that is we've been talking about now for I don't know how many years.
Going on 7. It's crazy.
Yeah. But I was not going to say just about the base money stuff, because that is true for the sort of the taxonomy of where we are. But the, rely on that power curve for some comfort. Because I still think, and I've said this before in your show, I still think that 95% of what Bitcoin does right now is relative to the power curve, right? Whether it's over, under, this is a trajectory of network adoption. You put it on log scale. It's a beautiful straight line. This is how networks grow. We can talk about that in as much detail as you want, but nothing has changed from that thesis. And you can compare it with gold, you can compare it with dollars, the stock market. They all have power relationships, which is wild. It is a wild thing because, the rest of the world is run on credit and grows exponentially and often very in a non-stable manner. So, even with these big swings in Bitcoin, you're still very much hugging this 96% R squared power trend, which is something to take comfort in. It's a sustainable trend, unlike TradFi trends, which are not stable, often very volatile, often booms and busts. Bitcoin has a different trend.
Yeah. No, and I'm not sure if you've been following it, but to your point, 95% of what we see in price action is driven by this network adoption. The other 5% by external variables. If we're looking at short-term impact on price, I mean, I was a bit tongue-in-cheek with the suppression talk earlier, but I think what we're seeing now is Bitcoin's use case as a liquidity alarm bell. I'm not sure if you saw Japanese bond markets last night and over the course of the last month. It looks like they're blowing out. BOJ came out. I don't know if it was the BOJ or just an official, but sort of signaling, hey, we may have to raise rates here to control this runaway yield curve that we have here.
Yeah. And it's funny because Japan, it's a story like Greece. I mean, they've been going at this for 30 years now. Yeah. Excessive money printing, it sort of always seems to somehow be this surprise that we have to deal with. But how long this carry trade will continue to go, it's anybody's guess. I don't know. The yen, unless you're really worried about Metaplanet, most people, it's just Japanese investors that are usually the ones most affected are Japanese investors trying to get in and out of, other currencies to get more yield than they used to get or typically get, with their own currency. So I don't think about it too much, but yeah, it is a major currency.
Yeah. Well, let's dive into the charts. Give people some peace of mind.
Good. All right. So obviously, you want to start with price first and foremost. Okay, this is the old power curve. If this was an exponential trend, as I often talk about, this would be a straight line, not this nice, smooth, sustainable line. And we're definitely low. All right, I got this little dip in 86,600 when I pulled in the model. And if you just go to the fun ones, let's go to, say, the 90th percentile. All right. I did quantiles now, which is a little bit different. I would have the sort of jagged lines in the past sometimes because that was a multiple over or under trend. to keep a fixed multiple. Now this is a fixed percentile. In any event, it's very similar result. So I envisioned, somewhere here, Bitcoin jumping above, and then I'd just be talking to my viewers like, okay, so let's just expect how many days are we above it here. Let's just think about how many days we've been above it, which usually is not more than 2 to 3 months, right? But that hasn't materialized, other than a little bit at the end of last year after the election, and then a little bit last summer. But again, when I show these charts, I always caution a lot of what the analysts, the technical traders will do on TradingView is they're usually thinking in straight line and log linear space or exponential growth, which is how typically stocks move. And Bitcoin just doesn't do that. So I think, whether you talk about these Elliott waves or ABCD corrections, all that stuff, Bitcoin, there's not an established method over the long term that is definitely going to do that, because it just does not have a straight line exponential growth on log scale. So anyway, if we take it, the median, the 50th percentile, it's a little bit below the trend. 40th and then 30th is where we are. So another way of saying that is based on the power trend, which should give everybody a lot of comfort. The price right now has only been this low 30% of the time. Okay, so 6,500 days of Bitcoin or whatever it is, 600 days would be 10%. So 1,800 days, something like that. You can just do the rough math. It's been at this level. Of course, it can go lower, can always go lower. But what this can tell us is just the relative risk of where the price is, relative to its relationship to the trend in the past. So, and if we go to the lowest levels expected, all right, which would be levels like this back in 2022, all right, with the SBF puking and all the other DeFi scams of that time. Right now, that suggests a lowest level of $57,000 Bitcoin. By the end of the year, it'll be a little bit higher, 59,000. Right. The trend itself, the overall trend will be 125K, and then getting in the 90th percentile. Whether you do it at a couple different metrics, I think you get like 200K or 250K. Now, I have been one of the few people to not fully discount 4-year cycles simply because we haven't been through it. I know a lot of people seem to be keen to make that call. I'm not saying it's definitely not going to be over, so it's kind of wimpy call from that side. But I don't know. The data, the data's not all in yet. We haven't even finished the year. You never know. There could still be a pump. And there's just some other interesting little data that I could show you that shows at least something is happening on chain with some movement of coins. So we can look at that as well. But yeah, I'll stop there.
Sup, freaks. This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
Sup, freaks? This rip is brought to you by our good friends at Silent. Silent creates everyday Faraday gear that protects your hardware. We're in Bitcoin. We have a lot of hardware that we need to secure. Your wallet emits signals that can leave you vulnerable. You want to pick up Silent's gear, put your hardware in that. I have a tap signer right here. I got the Silent card holder, replaced my wallet. I was using Ridge Wallet because it's secured against RFID signal jacking. Silent, the card holder, does the same thing. It's much sleeker, fits in my pocket much easier. I also have the Faraday phone sleeve, which you can put a hardware wallet in. We're actually using it for our keys at the house too. There's been a lot of robberies. They have essential Faraday slings, Faraday backpacks. It's a Bitcoin company. They're running on a Bitcoin standard. They have a Bitcoin treasury. They accept Bitcoin via Strike. So go to slnt.com/TFTC to get 15% off anything, or simply just use the code TFTC when shopping at slnt.com. Patented technology, special operations approved. It has free shipping as well. So go check it out. This is a good day to hop on with you. The price is falling. Wondering if you're out there, particularly if you're relatively new. I'm sure you're thinking maybe you bought Bitcoin above 100,000. Maybe you bought a little bit at the top at 123 to 126,000. You're thinking, oh, gosh, what did I do? What did I do? What am I doing? Did I get duped by these people? This is why we check in with Matthew once a quarter and look at the power trend, because nothing is out of whack here.
Yeah, and it moves fast. All right, like if you want to know some numbers as far as how this thing goes, the trend itself goes up $100 a day. Still does. All right. By the end of the year, the trend will be growing at 42% a year. 42%. So you compare that to your stocks, bonds, gold, whatever you want to, JGBs, whatever you want to compare it with. The trick, the interesting thing, which, a lot of people are trying to figure out, including myself, is there's this interesting, as we have this thing, it's not a straight line, right? Like the stock market would be the gold market, which I'll show you in a second. That actually means that the rate of growth is declining for Bitcoin ever so slightly. You can find these calculations on my website, but it's an interesting phenomenon. And, well, without getting too deep into it, I think it's possible that Bitcoin could go exponential, which means like it could turn into a straight line on log scale, which, by the way, is faster growth. Like if you just want to go sort of full bull case, or, I don't know, you might like exponential growth. But the thing is, wrapped inside of exponential growth is a lot of fiat interest, right? And that's just the nature of the math. Mortgages, your car mortgage, lines of credit, everything in the world is exponential growth. And so if Bitcoin starts to take on enough fiat credit behind it, maybe Bitcoin itself will be pulled into this exponential growth. What I'm hoping, though, because this is sort of an idea that I think is like, okay, well, maybe early investors will just have number go up, but the rest of us will be still laden with a lot of debt, and there'll be debt, a lot of fiat interests swirling around the lower levels of the Bitcoin system. I think a more interesting scenario could be, as the world continues to go through these debt crises, however they may play out. There's a lot of theories there, but however these sort of sovereign debt crises or situations may play out, whether there's excessive inflation or some deflationary crashes, which, as you know, you and I are both inflationists. They're usually going to print they're always going to print to paper over that. But in any event, how this might play out is if the world starts to understand that Bitcoin really is that risk-free asset, and there's, no matter how you want to phrase it, you cannot print Satoshis like you can print dollars. There's a possibility the credit could completely change. The name of the whole game of credit could change. And so that's what I'm trying to think about right now a lot. I talk about this a lot, because then you might be in a situation where this nice, beautiful, sustainable power curve of Bitcoin changes the entire TradFi system, where the entire TradFi system doesn't go into these unsustainable booms and busts, but it more becomes into this sort of gentle growth that mirrors the growth of Bitcoin that you can see with the hash rate or address growth or the growth of the price and market cap itself. So that's a little bit, that's a lot for the start of the episode, but that's one of the things that I'm thinking about. Sort of, will Bitcoin change the system, or will Bitcoin be changed by the system?
Yeah, and this is a thread we've been pulling on all year, essentially when the power trend slope and the exponential slope intersect. What takes over what? I hope it's the Bitcoinization of finance and the sort of curbing of excess risk taking and credit creation. I'm hopeful that can happen too.
Yeah. But it's going to be a fight. You know, I mean, like we talk about this all the time in crypto Twitter, right? Bitcoin Twitter, crypto Twitter. It's like, okay, well, we have all these, you have these like Ethereum ETFs. I mean, you have a lot of Wall Street chasing a lot of garbage, as they usually do.
Zcash. It's a hot thing right now.
Zcash. Yes. Unfortunately, I don't have any of those saved to hawk into Bitcoin, but win some, you lose some. The idea that Wall Street can just sort of come in and overtake the Bitcoin industry like it's overtaken any sort of nascent industry is, of course, strong. And this, you started out the top of the show talking about what Caitlin Long's saying, what a lot of people in Wall Street are saying. And I think still a lot of people in Wall Street don't even buy into Bitcoin, right? They're more interested in AI, not at all asking about the energy consumption of AI versus Bitcoin, but that's another story. And, the verdicts, the jury's still out on that, obviously. I mean, Bitcoin is a global thing. It's just not, even though it might be very nicely tailored for, some collateralized Bitcoin instruments where you can draw on it, sort of like you can draw on Manhattan real estate and all that stuff. Bitcoin is a global system that's really outside the purview of any central bank. And it's, as long as it doesn't get co-opted by central banks like the gold market has done in the last 100 years. I think at least that short to midterm manipulation, to use that word, would be very difficult. And probably not even the long term, as we said. I don't think the long term, you can manipulate this stuff over the long term. But they're going to give it a big fight, man. They're going to give it a big fight. And, all these people were talking about a year ago how the Trump administration, I'm curious to hear your thoughts about this. Like, the Trump administration's going to legitimize Bitcoin and crypto. It's hard for me to see them legitimizing anything at the moment, Marty, but I'd be curious what you think about how I do not think that the nation state threat to Bitcoin is over yet. A lot of people thought it was a year ago.
No, I don't think it is either. I think we have some recent actions that would prove that the fight is not over, particularly the samurai plea deal and then sentencing, which was incredibly egregious in terms of the attack on open source developers building non-custodial wallet software, being punished.
Right.
That's not a good sign. That's happening in Trump's America. And then as it pertains like Trump and his crypto policy, I think obviously the two of us are of a certain purview that Bitcoin is the thing worth focusing on. If we're just being objective of the first 10 months, 11 months of 10 months of this administration, it's been unfocused on Bitcoin and more focused on stablecoins, market structure, and potentially creating the foundation to co-opt Bitcoin by putting strict laws and regulations around it and sort of ordaining particular companies as those are the ones that you're allowed to interact with Bitcoin. And again, going back to the samurai thing, the sort of punishment of those using Bitcoin in a self-sovereign fashion and building tools to enable people to do that. So, but yeah, I think we're in a weird spot. And I think the way you set that up in terms of, is Bitcoin going to get co-opted like gold, or is it going to break free, considering the fact that it is this unique beast, this unique tool that gives you the ability to do both. I think the last 6 months specifically have been Yeah, if you're not paying attention, you probably should be, because we've seen this sort of conflict coming to be, whether it's strategy, launching all these preferred offerings, trying to put Bitcoin into these wrappers and provide yield on top of it. Obviously, strategy stock has not been doing well. We can get into the theories around JP Morgan and their attempts to co-opt products like that because they deem them as a threat. But I think if you juxtapose sort of those actions with what we've seen from companies like Block and their Square point of sale rollout to really, and their aggressive campaign to make Bitcoin everyday money, I think if you look at public markets and two of the behemoths in public markets as it pertains to Bitcoin, strategy and Block, we're seeing those two visions sort of duke it out at that level right now as well. Maybe not even duke it out, or just simply present two different paths for Bitcoin's future.
Yeah. And it's going to be interesting to see, how strong the U.S. really can be in some of these things, right, with this global asset, because I was on a panel in Helsinki with Peter Todd and I'm back over the summer, and it always revolves back to this sort of political nature versus the sort of economic force that Bitcoin is. And he said this a lot. You've probably seen him write, he's referenced the cypherpunks in the 90s and the code of speech and, the national security issues that were surrounding code, crossing borders in the 90s. And the U.S. as the sole hegemon at the time, that was a huge deal. And it was won, that issue was won in the courts of the U.S. that code was speech to some extent, and it's not, these national security issues like you could take code across borders, and the cypherpunks did that. On the other hand, so I think there's a lot of so what Peter was saying basically is at some point it is going to have to be political. You're going to have to win politically. But then on the other hand, I think about this a lot in that, it seems almost bizarre that Bitcoin would have to be deemed legitimate. Like at the end of the day, what's it going to come down to? A Supreme Court ruling over something specific? It's like 5 guys in black robes or ladies in black robes, like deciding that some Bitcoin, ruling is really going to sort of set the policy for Bitcoin in the next 50 years. I think that's actually less likely, especially based on the way that the rest of the geopolitical world is kind of going at the moment. China's trying to be big in gold, and obviously Russia's a basket case, which we are dealing with over here, and the U.S., is having its own new approaches to geopolitical issues in the Americas, North and South. So it's just, it seems less likely to me that a Supreme Court ruling would be sort of like the final arbiter of where we go with some of this. But anyway, starting to philosophize a lot on that, so we can bring it back to the charts. So anyway, point is 70% of the time we've been higher than this relative to the trend. So with some statistical accuracy, you can say there's a 70% probability that we'll be higher than this into next year, especially if you don't consider or if you consider that we have not had really a blow off top, which would make it more likely that we shoot below these levels. Anything can happen, but that's sort of how I'm looking at it. If you look at gold now, all right, so here's gold over the last 50 years on a weekly basis. And its trend is not as good, but it's an exponential trend, straight line. See, Bitcoin has this nice curve, right? Which everybody should know by now in log space, log linear. Gold is a straight line, so it's exponential growth. And obviously we're super, super high. If you do these quantile regressions, which sort of just take every individual level as their own thing and try to run their own trend lines, the worst, was in the early 2000s, and the best is indeed now. All right, it's relative to the 1980 top, and relative to the 2011 top, we're creating new highs basically almost every day. Whether this is some real long-term resistance, I have no idea, but I can tell you one thing: I've drawn these different trends on my stream, like. This line right here, if you just imagine here, the price, my mouse is over the B here, which it shouldn't be a B, actually. I just realized with this chart because it's a gold price. But over the B, it is obviously going super fast from the end of 2023. Or the end of, the end of 2023. That's like a 40% trend line growth a year. 40%. It's matching Bitcoin basically. That's like a Peter Schiff trend. I just do not imagine that continuing. In fact, you can run all the numbers. It's not going to continue. Could it go for another year too? Yeah. Could we get to $10,000 gold? Sure. But gold just is not on any sort of a trend to reflect, $100,000 gold or $200,000 gold.
Well,
so yeah.
Does this chart speak to you in terms of the thread we've been pulling on, in terms of Bitcoin's power trend meeting the exponential growth trend of credit at some point in the future? And what happens with this? So we're looking at gold over the last 50 years. Obviously, gold, I would imagine in the early days, millennia ago, it had a power trend adoption as it was being monetized. And obviously, it's been fully monetized for millennia now at this point. And now that it's on this exponential growth trend, is that what happened to gold? It sort of ran into the exponential trend of credit growth before, long before Bitcoin. And this was the end product.
That's a interesting question. I've never been asked that or thought about that. I have no idea if gold would have followed a power trend at the beginning, but I imagine that if gold was the general unit of account and silver as well, and we had credit, which as Sidney Homer has said from the history of interest rates, credit, which I agree with, credit is long before gold, right? It can be in primitive societies, advanced societies. You don't need barter. You don't need money. You can promise your uncle, the proceeds from the yield from the crop next season if he lets you use his plow or something. I mean, you can make credit out of anything, and credit itself by nature has interest. I would imagine that there would still be some sort of an exponential function always, which again makes Bitcoin really, really unique, weird. I've never seen an asset grow in power. So that's what I would say there. As far as gold's growth, it's really not that exciting, which is another funny thing, right? It's been, a lot of people say this number 8-9%, but that's if you're over the long term of gold. That's if you cherry pick down here the $35 price and now, $4,000 price. Then you can get up to 8-9%. But that's a cherry picked sort of present future value, as I always try to do. If you take the long term trend, measure the slope of that, you're at 5.25%, 5%. So it's actually not even been a great hedge if we consider that the global money supply, which I always measure, I also measure and have always measured every quarter for the last 8 years, has been growing at 10 to 12%. 12% if you think about it more in native terms, 10% in USD terms. It means the USD accretes 2% over other currencies, or other currencies lose 2% relative to the dollar on average. It shows the dollar's supremacy. If you think about those rates of growth, then yeah, gold is actually not even that great there. So I would say it doesn't apply. Okay. I would say gold just, it's so wrapped around credit. Here's the thing with Bitcoin. Bottom line, if Satoshis are so rare, as rare as we know that they're going to be. You can look at the supply schedule that how many Satoshis are going to be, minted 50 years from now. And it's like such a small amount. Credit's going to become, it's going to be, in my view, very difficult to have credit markets, because holding on to those Satoshis, passing them down to your family, is going to be a much more valuable endeavor than just, going after a few extra percentage points on some, short-term corporate loan, which might fail, right? And so that's the one thing. And then the other thing is, it's just how long can this fiat game keep going? I think it can actually keep going for a long, long time, and I can show you lots of charts that will sort of reflect that. But I have a hard time, unless it's full, this is where, unless we sort of lose the legislative or the political battle, like unless everyone is literally sort of at the, in a financial panopticon at the point of a gun, forced to use fiat currency for the next 80 years. And again, that's going to happen for a while. But, next 10, 20 years, that's going to start to be a question mark when there's, Bitcoin starts to become so huge. I think it's going to be hard. Everything that you've always talked about on your show is basically what I'm describing here in mathematical terms. Like, it's going to be hard to issue more and more debt to raise money for your armies and militaries. It's going to be hard to issue in more and more debt for your welfare programs. Bitcoin is what you're going to be fighting for. Everybody's going to be fighting for. And Bitcoin doesn't mix well with exponential growth. It's a limited, sustainable growth pattern. It just doesn't, it's hard to wrap your mind around this idea. But, if credit, if debt, if interest represents something that can take off, can gallop exponentially and cause a lot of these booms and busts, Bitcoin by its nature, and we've seen this in the math, does not do that. Even in dollar terms, which is wild. So I have a hard time seeing that it might do that in the future. I can show charts on this as well to make it more concrete, like as far as Bitcoin continuing to grow as power versus maybe growing exponential. We can look at those. But the general idea is, I think a more just and exciting future for everybody would be if we're not all forced to use these fiat units, and then the powers that be understand that they need to accumulate Bitcoin for their war chests and their treasury chests more than, having the right to print money. So it's going to be crazy. next 20 years is when you're going to start to really, the rubber's going to hit the road. That's where Bitcoin's going to be large enough to meet, the level of the US debt or the monetary base or a lot of these other things in the TradFi system.
Sup, freaks? Have you noticed that governments have become more despotic? They want to surveil more. They want to take more of your data. They want to follow you around the internet as much as possible so that they can control your speech, control what you do. It's imperative in times like this to make sure that you're running a VPN as you're surfing the web, as we used to say back in the 90s. And it's more imperative that you use the right VPN, a VPN that cannot log because of the way that it's designed. And that's why we have partnered with Obscura. That is our official VPN here at TFTC, built by a Bitcoiner, Carl Dong, for Bitcoiners focused on privacy. You can pay in Bitcoin over the Lightning. So not only are you private while you're perusing the web with Obscura, but when you actually set up an account, you can acquire that account privately by paying in Bitcoin over the Lightning Network. Do not be complacent when it comes to protecting your privacy on the internet. Go to obscura.net, set up an Obscura account, use the code TFTC for 25% off. And when I say account, you just get a token. It's a string of token. It's not connected to your identity at all. Token sign up, pay with Bitcoin, completely private, turn on Obscura, surf the web privately. Obscura.net, use the code TFTC for 25% off.
So, freaks, when you take Bitcoin seriously, you start with custody. You want to control your keys, avoid single points of failure, and make sure your savings cannot disappear because you or someone else screwed up. That is what Unchained has been focused on since 2016. Unchained is the leader in collaborative multi-sig custody and Bitcoin financial services that keep you in control. They secure over $12 billion in Bitcoin for more than 12,000 clients, That means about 1 out of every 200 Bitcoin sits inside an Unchained vault. Their model is simple. You hold 2 keys, they hold 1 key. And it always takes 2 keys to move Bitcoin, meaning their single key can't access your Bitcoin on its own. Just resilient, shared custody that gives you institutional-grade security while keeping you sovereign. Unchained also lets you trade straight from your vault, access Bitcoin-backed commercial loans, open a Bitcoin IRA where you hold your own keys, and set up personal, business, trust, or retirement vaults. They even offer inheritance solutions built for long-term hodlers. Or opt for the highest level private client service with Unchained Signature and get a dedicated account manager, discounted trading fees, exclusive access to events and features, and much, much more. If you want a partner that helps you secure and grow your Bitcoin without giving up control, go to unchained.com and use the code TFTC10 at checkout to get 10% off your new Bitcoin multisig vault. That's TFTC10 at unchained.com.
We'll bring it back to, you mentioned on-chain data that you've seen. What are we seeing? In terms of
there's some hodl waves. This is a great site, by the way. It's Research Bitcoin. People don't know about it. You can get most of the data for free, a little bit for some of the extra data, but these are all the different hodl waves, right? So generally, as people hodl, you'll see longer and longer, more darker, purpley, blue colored waves here. Every once in a while, though, you see those waves shrink like we did here July 4th. Someone sent like 84,000 Bitcoins to Gemini, right? So actually, this deep 10-year hodling wave shrank. But anyway, if you take out the longer term waves and you cap it at a year, we are seeing some little bit of short-term UTXOs growing, which typically have been around booms, right? That takes time, could take a year, but there's you see it happen here, you see it happen here, you see it happen here. And of course, we've had this long boom, right? With the 3 distinct tops here since the ETFs were approved. But there was an interesting, notable jump here over the last couple of days. Again, I'm not saying bet the farm on it, but as the UTXOs are destroyed on the longer side and created on the shorter side, that sometimes means some excess hype in the markets for price. Well, in fact, all the times means that when we go really extended and you can see we had 2 booms in the last one. And even during this last price, can you hear me?
Yeah.
All right, sorry. And even during this last price spike in August of 2025, we did not have as much of a sort of a boom in the short-term UTXOs, but now we are, which is interesting with this deep discount where we got down to, 80, 85K intraday. I think intraday was even 80, right? I don't think I picked it up on the daily, 85. But so there's something.
So we're going to pump in the end of the year. We're going straight to the 90th percentile.
It's probably too early to tell. I was talking to James Checkmatey a couple weeks ago, and he was trying to, he's very good at reading the on-chain data. He's like, probably shouldn't say it, but it kind of looks like a dip. And it turned out to be a deep dip. If it still is just a dip, to be seen. But there is a noticeable jump in short-term UTXOs. And if that spike in short-term UTXOs gets sort of proportionately high relative to the other UTXOs, then you always see the price pump.
Yeah.
So, look, do I have to give my Midwest caveat of, not financial advice? I'm never going to give you that. I'm never going to say, bet the farm, we're pumping to the 90th percentile. But it's fun to look at, right?
Yeah.
It's fun to look at this data.
It's fun to look at all of it. Well, and that's the other thing I think I've been trying to really wrap my head around, too, is like what's going on in the incumbent fiat system? Like, what's your read on what's going on here in the United States, what's happening broadly with these geopolitical tensions? increasing. Obviously, we talked about the Japanese bond yield blowing out earlier.
Right.
It seems like we're at this point, and I don't know if you've been following the tea leaves of like deep economic not prognosticating, but people trying to read what Bissent and Trump are doing at the Treasury and what they're trying to do at the Fed. And there's a lot of talk about this needle threading that they're attempting to do with tariffs, reshoring manufacturing, weakening the dollar, and trying to make sure that we can get it on the other side and still have a sense of dominance, particularly in the realm of monetary economics. And I think we're just in a really weird inflection point as it pertains to geopolitics and its effect on macroeconomics.
Yeah. Two things I would say. Two things come to mind. The first one, to be a little bit redundant on purpose, what I just talked about at the top of the show, take comfort in the fact that we have a very unique trend for Bitcoin that, look, I've been on this trend, the bleeding edge of this trend since the beginning. There's a lot of wacky characters in this space of in Bitcoin in general, but, the people talking about different trends and, we've had stock to flow projections and all this stuff. I've been following this for 7 years, the power curve itself. What's the year, 2025? Yeah, end 2018, I first did it. So the Giovanni character, who's big into it, he was a little bit ahead of me. But no matter how you follow people in this space, everybody's very passionate, let's say. And what I can tell you, trying to be, mostly understated with some disclaimers as I usually do, I'm highly confident that the power curve itself is it's like one of the main drivers of growth. And it's the reason, I was on Danny's show recently, talked about it. It's just, the reason is this is how networks grow. There's a lot of research to suggest that organisms grow this way. I talked about this on my talk, sort of my summer circuit when we were talking about growth rates and stuff. Like, this might have been a Jeffrey West book as well, Scale, which is a great read. Like, something like Godzilla, that would be an exponential growth type animal. All right. It would it's a massive thing. It would need like a mountain of food. And by the way, it would just collapse on itself. It's just not possible sort of in nature. But what we see in nature is you have this nice proportional relationship with the way organisms grow, like pretty much all mammals. Sometimes people take it to the whale size, some take it to an elephant size. But they need actually a proportionately less food as they get bigger, but they don't grow to Godzilla size. This is proportionate growth. And if you charted that sort of calories and size on log scale, you'd see a nice, beautiful straight line. You see it with networks, right? You see a few large nodes take a ton of connections and a bunch of small nodes take few connections. This sort of it's an 80-20 rules, basically. It's power law. There's power curves everywhere, but to see it in Bitcoin is really, really wild. And so again, take comfort in that because you don't see it in the growth of gold. You don't see it in the growth of the S&P. You don't see it in the growth of stocks. Let me show you this. This is the top 8 tech stocks in the world. Same thing. Now, this is a very fast R squared, by the way. And, big drops. It can go from, this is Apple, Microsoft, Google, top 8 stocks. It got Broadcom in there as well. It's now a big one with the chip race. But, they were $11 trillion, the top 8 tech stocks in the US in 2021, fell down to 6.8 by 2023. Then the AI boom started. Just like gold, they've had 40% growth, by the way, with like a huge 30, not 30, maybe 15% drop. Yeah, during Liberation Day, my favorite day of the year now. It's hilarious. 13 goes down to 13.9 trillion. Now all of a sudden back up to 22.8 trillion. That's volatility. And this is an exponential curve. Actually, one of the best performing if you just track these 8 stocks. So sometimes exponential growth can help you. Sometimes it can hurt you with inflation. But it's a very volatile thing. But the fact that Bitcoin is not growing that way is very important, very interesting. The next thing that I would show you is this chart. Remember this one? I always show this guy.
Yes.
This is the long-term debt of the United States. And again, having in mind what I just said about how the nature of Bitcoin is something to take comfort in itself, here's the nature of debt in the history of the United States itself. It grows at 7% or so, doubles every 10 years. It's actually growing even slower in recent years, surprisingly, compared to where it was growing, say, just after the Bush years. But anyway, we have overlaid with this is the central bank holdings of U.S. debt. You see it peaked in like 18% at the end of the Vietnam War, and it went down, but it was actually going down because debt was growing faster than central bank holdings. Then you had the crisis. This big dip was a Wall Street bailout. They swapped corporate bonds for treasury bonds on the balance sheet for a time. Then they gave everybody guarantees, and they went back. Then they had QE1, 2, 3. Drop. Big taper tantrum repo spike in September 2019 before the madness of 2020, then the madness of 2020, and now we're down. So where does that leave us today? November 2025, the Federal Reserve holds $6.2 trillion in treasuries. 38.3 trillion have been issued. All right, so that's 16%. Where have they been at the max? Well, during the crazy season, November 2021, they maxed it out at 28.3%. So by my count, that's over 12 percentage points that they could go. All right, it's not a full double, but basically the Fed could double what they have held in the past and still proportionately not be bigger than the highest inflation they've ever had on their balance sheet. Now, would they want to do that? Probably not. Certainly not all at once. But we know that we're going to get a very dovish Federal Reserve chairman in soon. And anyway, anybody who casually follows economics knows that the Federal Reserve, no matter how much they say it's independent, it's not independent. The president will always get the interest rates that they want eventually, no matter the president, Democrat, Republican. So it's par for the course as far as I'm concerned. And look, they have a lot of room to go higher if they want to go higher. No matter all the noise, all the talk, you just look at this chart. I'm not saying it's a good thing, by the way. I'm not defending the actions, but they have a lot of room to inflate.
I mean, at the very least, it would not be unprecedented if they did inflate and go back to all-time highs from here. Just like eyeballing the chart pre-2008, like well before that dip pre-2008, they were
10%, 9%.
10%.
Yeah.
We're hovering at 16 now.
It's an interesting history of the United States right here, all in one chart. Federal Reserve was not really involved in the funding of World War I. You see they had less than 1% of government bonds. It was more like JP Morgan, private bankers were doing that. They did become involved after the Great Depression, or during the Great Depression, and as well during World War II, and much more during Vietnam, actually. And then much more after the crisis. But there's no start date or end date to this stuff. They're just going to continue to print and to try to hold on to their power.
Yeah.
So
so
that's what we can expect.
Can you overlay the percentage of holdings of foreigners?
Sure. This one hasn't been this might not be exactly correct in the last couple months, but basically it goes down.
Yeah.
And that's a problem for Besant. He wants more foreigners for sure. And it's going down. Okay. Foreigners used to hold maybe 35% of the debt. at the peak, and now they're down somewhere to 20, 22, 23. This might even be a little bit lower. I haven't updated this in a couple months. It's something like this.
Do you buy into the theory that the Genius Act was a way to get this? Like, would Tether be considered a foreign holder?
I don't buy into the theory of any of that at all.
Yeah.
It's what's the market cap of stablecoins?
Like 180 billion, I think, right now.
Yeah. So the repo market itself is, by my count, 7 trillion. I've heard higher. It's not very clearly stated, but I can show you the old
Tether's
U.S. money supply chart.
Tether's 184.6 billion. USDC 76.5 billion.
Right. Growing, but here's the old total money supply of the United States. All right, calculated by yours truly. Federal Reserve has not calculated M3 since 2006, so you actually have to go back into the numbers. Most of the data is still there, but it's hard to sort of parse through, and Eurodollars are not there. So this is even bigger than it shows. So it's a little bit conservative here, but the most analogous buckets of money that will fit into stablecoins are these buckets right here, which is part of M2 and M3. By the way, what's the difference between M2 and M3, Marty?
M2.
Lay it on me.
M2 and M3. M3 gets into credit, right?
It's a common, how many Twitter charts have you seen of Bitcoin lagging M2's money production?
Too many.
Clairvoyant. Yeah. First of all, Bitcoin is not comparable to M2, folks. It's M2. The difference between M2 and M3 is M2 is less regulated retail deposits. M3 is less regulated institutional deposits.
There we go.
And by the way, what's the hottest money? Institutional. So why in the hell would Bitcoin be anything related to M2? M2 is a retail type money supply. It does not include the hot money. It's basic stuff, but and again, I can forgive plenty of people for being confused on this because the Federal Reserve themselves have not published M3 since 2006. So you got to go through these numbers. You got to sort of figure it out. But by my count, the hottest money right now is 7 trillion in all-out repurchase agreements on the bank and shadow bank side. 5.3 trillion in money market funds for institutional and 2.1 trillion in retail money market funds. You put those two together, obviously it's 7. So 7 and 7, $14 trillion. $14 trillion. Probably, not most, this is the instrument itself, but probably 2 trillion is US and some foreign holders mixed in there. It's not just, but that's the biggest holders of treasuries right there. It's these instruments. And so I don't see any tomorrow fix for sort of a lack in demand for treasuries, if there is one, coming from stable coins. I mean, it's a drop in the bucket compared to these markets. It's $14 trillion compared to 200 billion in stable coins.
250 billion. Okay, they're catching up.
Yes. Look, it's going to grow. It's going to grow, no doubt. But none of this stuff is Trump definitely wants a bite of Lutnick's Cantor earnings, right? I mean, everybody knows Tether's a great business. Don't get me wrong; it's all great stuff for them. Clean, just collect that interest and issue the token. But that's a money market fund. It's going to take a long time for that stuff to revolve into stable coins. And it probably is going to come, but it's just not, structurally, it's not even there. It's like when I show you the chart of FedWire versus Bitcoin, right? Remember that? I can pull that up if you want to see it.
Yeah, well, that's one of my favorite charts. And so I guess I was loosely correct when I said M3 is when you get into credit instruments. It's when you have all these repo, money market funds, retail market funds, buying bonds, which are credit instruments.
Sure, yeah. But to be strict on what I'm counting here, it's actually you're just counting liabilities of financial institutions and banks. That's how you count money.
Yeah.
So it's just liabilities. And what they buy on the other side is not specifically stated in the money supply. That's why I said it's probably mostly treasuries, but not always. But if you want to talk about the hottest, fastest money that's chasing, U.S. government bonds, it's here. It's and this is not part of M2. Well, retail money market funds are, but institutional money market funds and repurchase agreements are in M3. So again, it's kind of a nitpicky thing, but that's important for people to think about. All right, this one, when have I haven't actually, it doesn't really matter. I haven't updated this one since August, but here's the old FedWire. This is again why, just relax. It's got some time here. We have $1.1 quadrillion that goes through FedWire a year, and Bitcoin as of August, 4. And actually, that actually looks even wrong. I think something happened on my back end. I think it's 7, but it doesn't really matter. One of those is close enough. It's just orders of magnitude difference. Actually, yeah, something happened on my back end. That's why I don't have this up on my site yet. It's like 7 trillion. I don't know why this is showing 4 now.
So the black line would be
slightly better,
down
a little bit. Yeah, the black line will be down better, but it doesn't really matter. It illustrates the point.
I mean, in the black line, for people both watching the video and listening at home that can't see the black line, it is on a consistent trend down and to the right as time goes on. And what it's measuring is the sort of ratio of FedWire transfers to Bitcoin network transfers. That means that Bitcoin is growing in prominence. Yeah.
When that gets to 1, then Bitcoin will be competing, apples to apples with FedWire.
Yeah. So I go to so we're not, I think, starting like 2010 on the black line.
Yeah, I could just take this off. Something happened on my back end. This is partly right, but I don't know what happened just here. But anyway, doesn't really matter. The best, we're actually not even at the best. Say it's 7 right now. The best that Bitcoin did on a trailing 12-month basis was 18 trillion. 18 trillion, which would have been at the time 57 times smaller, or more appropriately stated, FedWire would have been 57 times larger than Bitcoin, which is good. I mean, that's a great, great run by Bitcoin. But still, if you just look at this simply with your eyes and you just see how huge the dollar network is, it's massive. And you got to think about how, day to day, block to block, how much time this is going to take to accrete, right? For Bitcoin to accrete in value. It's going to take time. It's not going to take forever, but we're on the sort of 10 to 20 year track when we're going to meet a lot of these levels, both in terms of volume and in terms of value.
Yeah. I mean, if you put the black line too, just to put it in context, in 2010, 2011, FedWire was more than 1 million times. More than 250,000 times.
Yeah. We get 2011 May, which was very close to a peak in Bitcoin, right? I can probably zoom into June. June was a peak, 420,000. The month before, 5 million. So, and these are correct, by the way. So it's, it can be growing very fast at times, for sure. But this is a massive network with a lot of guns behind it, and it's going to take time.
Yeah.
Let me show you this one. So we talked about Bitcoin. We talked about tech stocks. Let's look at Bitcoin market cap in terms of tech stocks. This is another interesting thing. So this is also a power curve. All right, nice, beautiful curved line on log scale. But what is sort of interesting is Bitcoin has fallen off it since it's been coming down in 2022 because AI has been growing so massively, specifically during this time. So if we draw some percentiles, you will see we are putting in new lows basically every day, which is wild. So again, depending on how you want to look at this, depending on how an investor might look at this, especially if they are coming at this from the lens of being a tech AI investor, which there are a lot of those for Bitcoin. Bitcoin is getting cheaper every day compared to the top 8 tech stocks. Now, again, you could argue some of that's justified. AI is an amazing tool. It's going to take the cost down for a lot of things and the market cap up for certain companies. But Bitcoin itself is a more amazing tool, as we know. So it's getting very cheap for tech investors looking at Bitcoin, right? If you had all 8 stocks and you were just sort of looking at maybe rebalancing, getting very, very cheap. It's basically putting in new lows every day.
Yeah.
Which is wild. Now let's look at Bitcoin in terms of gold. Same thing. The power curve dominates. It's still a 95% R squared. But similarly, this run, since gold has also had, just like tech stocks from 2023, 40% growth since 2023. If you're a gold investor now looking at Bitcoin, you are at almost, as far as the quantile model goes, all-time lows.
Bitcoin's relatively cheap right now. It's relatively cheap right now.
20 ounces of gold per Bitcoin. And I would also caution here, which I think is very wild. So 20 ounces of gold per Bitcoin, that's like setting a new low on the quantile model. But go back even here, where Bitcoin didn't get, in terms of gold, was not at the 0th percentile, but was definitely under the 10th. It's probably around the 5th or something of all time. The price of Bitcoin at the time was 9 ounces of gold. So 3 years ago, Bitcoin was still cheaper. Or in other words, Bitcoin right now, even with its extremely poor performance against a booming gold asset, Bitcoin is still double what it was 3 years ago. That's a wild thought.
That is wild.
And to think, if we have this saying, right? Or at least the investors I used to work with would joke about it a lot. Like, you can be a pig, but don't be a hog. I am very curious how good gold bugs might have it at this point. Like, is it going to go back to 9? I have a very hard time believing that. I mean, like, we're literally, again, just like the tech thing, the tech analysis, we're excuse me, we're setting new lows on this trend every day. So, statistically, Bitcoin is as cheap as it's ever been relative to the trend of gold, BTC Gold.
Well, if we go down to the 0 percentile of the power trend, that would be 9 times. That's when we would go back, right? Be around 56.
You mean the
52
power trend in dollars?
Yeah. I mean, if gold stays at 4,000, Bitcoin goes to 56, that's 9 times, right?
Yeah. Or if another way to think about it is the power trend of Bitcoin right now in gold ounces, the trend is 64 ounces, right? So we're at 20. So 3x staying at current gold prices would take us back to trend for gold. So 3x in dollar terms, meaning, close to, I mean, definitely close to 200,000, if not more.
Yeah.
Doesn't mean it's going to happen. Doesn't mean it's going to happen this cycle. Doesn't mean the cycles are not over. But we're at wild extremes, globally on a macro level from where Bitcoin has been. And certainly at levels that Wall Street, like Wall Street knows about the power curve by now. Like, they love this fear. They love it. So they would love to exacerbate this more, accumulate more Bitcoin, no question about it.
How long do you think they could exacerbate it? I know you said short to medium term.
No idea.
Yeah.
Your guess is as good as mine.
Yeah.
There's a lot of fiat dollars and fiat interest running around, paying people's salaries. I mean, they could go a long time pushing this price down. But of course, Bitcoin has a very, specifically in the gold analogy, Bitcoin, as we know, balances its budget every 10 minutes. And Bitcoin, due to the difficulty adjustment, is not susceptible to the same supply-demand relationships of gold, right? So, gold miners are just loving life right now. I mean, they are. I'll show you this one.
How hard are they digging right now?
Very hard. And I mean, you got projects, no doubt, that are, were just absolute duds that are now being, revived. And just, pie in the sky projections, I'm sure, scaling up slowly. And, some of those projects are going to work out fine. Other projects are going to remain complete duds. And there's probably a lot of jokers that are coming into this business, just like jokers come into the Bitcoin business. But the difference is this, as they say, the cure for high prices is often high prices if you're a buyer. And the cure for low prices is often low prices if you're a seller. So the idea that Bitcoin is, that gold is just going to, like I said at the beginning, looking at the gold trend, just going to continue to 10, 20, 30K per ounce. Again, it might go a little bit on the short term, but supply and demand is going to start to rear its ugly head. And people are just going to wonder, literally in the jewelry shop, why am I paying this much for gold? And they might go into platinum or whatever. Let me show you this chart, which will show you a little bit what I mean here about how crazy this is for some of these people right now. Again, I'm missing something here, but I'll zoom in from this point. All right. This is similar. Hold on. It's a little bit outdated, but it'll do the job. This is a similar chart, kind of like the transaction throughput, but this is mining revenue. Okay. This is through June, and actually this is through September, close enough. All right. To today. 16 billion. By the way, not even a top on a trailing 12-month basis. This just assumes all miners sell their Bitcoin in terms of their block reward and their fees every 10 minutes at whatever prevailing price there is. This is academic calculation. A lot of miners hodl. A lot of miners don't even pay fiat. They take credit. They don't pay out of pocket. So there's, it's crazy business, as you know. But this is generally how the mining business is. It's a $16 billion business right now. This is gold now over the same
Holy
period.
Shit.
Gold is getting, there's about 100 million ounces of gold that are mined a year. Gold is becoming a $400 billion industry. It's massive. This Christmas is just going to be amazing for gold bugs. They're just going to be, I don't know how. I used to curse more on your show, but feel less inclined to now. There's just, it's going to blow off. There's no question this is not going to sustain, but it's going to, it's going to be a fun ride for a lot of people in that business right now. And it's just even from, say, January of 2021, they were making record revenues for this business at $200 billion. Now it's getting close to a $400 billion industry. But just so you see how small Bitcoin and gold are compared to oil, this is the oil markets, right? Trillions of dollars a year. So, again, doing the math on where we are in Bitcoin, back out, don't freak out, block to block, day to day. Not financial advice, but maybe take advantage of some of these cheap prices. There's just a lot more to the whole structure of all of this than I think can be, than one needs to stress about over one morning waking up and see Bitcoin crash, 5K.
And I think another thing to put in context too is this is not abnormal for bull markets either. It's 30% corrections, which is what we've seen over the last month.
And look, I mean, it's going to go on for a while. I mean, look at the oil markets. You know, they can crash $1 trillion in annual revenue. It's part of the game. Still, going back to what we talked about, Bitcoin being the sort of pristine asset, risk-free asset, I believe all of those things. I do believe that we could have all of these markets, you know, eventually priced in BTC or something like that. But it's going to take a long time.
I mean, trillions and trillions and trillions, tens of trillions of dollars to come in before that happens.
Right.
What do you think about silver and its blow off top right now? What is that historically? Sort of lagging silver blow off top to gold.
Yeah, it's high. I don't think I have one charted, but it's obvious. It's the same deal. I mean, you're at 100th percentile, right? I mean, it's could not have been higher. Let me see if I have one on the 10th.
See, where is it right now? Silver is trading at 57, new all-time high.
Yeah, this is all-time high. And as far as if you would measure that as far as miner revenue, even more of an all-time high because there's more bullion, silver bullion being mined now than there was 15 years, or not 15, 12, 13 years ago when silver was last at $55. So, yeah, these guys, metals investors, are having a good Christmas, no doubt. But maybe I didn't completely finish the thought about the supply demand, though. So at some point, a lot of these jokers, particularly, I believe, in the gold industry, which is obviously a very analogous asset to Bitcoin, you know, high prices will become the cure, right, to high prices. There will just be too many speculators, investors, miners in the business chasing too many projects. Too many jokers will start to come in, and supply is just going to outstrip demand. And once that happens, price falls. All right. As we know, Bitcoin is not susceptible to that problem because of the difficulty adjustment, because its budget balances every 10 minutes. It's just a completely different beast. You know, that's why we have number go up technology. We have just a, you know, however you want to define it, the only fixed asset in the universe. It's a completely different thing. I'm very much looking forward to how, you know, Bitcoin will react in the future to some of those supply demand dynamics because there's just simply a cap on the amount of coins that can come out every 10 minutes due to the difficulty adjustment. And you just don't have that. In the gold industry, you don't have it in the silver industry. You don't even have it in the oil industry. So that's again, backing out, trying to be more calm about what's happening. We can expect that's going to happen. You know, this could go another year or two. These gangbuster prices for gold and for tech with AI, they're growing at 40% a year right now on a trend. It's massive. But Bitcoin actually is also growing at 40% a year on a trend. So have that in mind as well.
Yeah. It's interesting to bring up Bitcoin mining too, because we're still over Zeta hash. We're sort of crescendoed a couple of weeks ago. We've had 2 downward difficulty adjustments in a row, but there was a point where we passed an exahash with authority on a trailing average in the middle of September. And then between the middle of September and the end of October, we added 100 exahash in that 6-week period. And I think putting things in perspective, like it took, I think my memory serves me correctly, it took us until 2020 to get to 100 exahash. And so the network, it took us like April 2020 to get to 100 exahash with authority. And so it took 11 years to go from 0 to 100 exahash, and network added in 6 weeks between middle of September and end of October this year.
Yep.
I think
Precisely.
that perspective, like when I sat back and looked at the chart and put that in perspective, I was like, holy crap, that's an insane amount of hash rate coming on the network. And now, granted, the ASICs are way more efficient. Bitcoin's been industrialized to an extent, but I still think there is some signal there in the hash rate markets.
Yep. I would really like to chart that, actually. That's a very nice nice stat, basically. Let me show you what we've done in terms of market cap. This is going to go a little slow. Hold on. Hash rate, by the way, another screaming power curve when it comes to Bitcoin, right? And we can show you how the hash rate relative to the market cap, or i.e. the network value, has trended. So this is literally dollars per hash of value. So you get extremely small numbers, even smaller as we go up, because hash is so outstripping market cap. But nonetheless, you would assume that during the booms you would have, these busts, you would have these peaks in market cap versus the trend. And it's interesting. It's not growing as fast, right, as it used to at the beginning, but it is kind of stabilizing. I don't know. This is one of the other ones that I would say is more for a more stable sort of Bitcoin future with not as much volatility relative to the trend. But this is with my multiple around the trend. It's a little bit different. Might need to run this on the percentile or the percentile quantile analysis. But in any event, yeah, it's not like, as one would expect, prices booming relative to the hash rate at the moment, and it's just sort of stabilizing at this number. But regardless, it's just incredible how much Bitcoin security has grown relative to the value of the system.
Yeah. What does that say to you?
It's just maturing. It's maturing.
Do you think there's more price insensitive hashers in the market?
You would be able to probably answer that question better than me. I don't know, but I would say, like, looking at the revenue, which is another way to back into this question. If I could find the damn chart here. So here, okay, this is a little bit more refined. This is 30-day miner revenue. It's not even at a it's not even at a all-time or a 30-day all-time high, right? Miners would make $2 billion a month back in March 2024. Now they're making 1.6, 1.7, and hash is what it is, right? Growing. So again, like, super secure network, competitive. At some point, you would expect these numbers to be much, much higher. But, predicting that is difficult.
Yeah. Well,
this is definitely a number go up chart,
yeah.
Right? I mean, it's going to be more profitable in the future to mine this very scarce asset. One can argue about, the reasons why it's not so high or whatever, but it's undoubtable to me that this is going to be a huge number in the future, something that compares with the gold markets or, even the oil market.
It certainly looks to be trending in the right direction.
Yeah, but, one would think it'd be much higher.
Yeah.
One would think.
Well,
But you're the mining guy.
Yeah, I think there's more price insensitive hashers in the market. And I think, I also think the market's got, like I said, obviously the machines are more efficient. And I think there's been enough time that the industry is sort of wised up to, okay, we need to really focus on cheap energy, cheap electricity. And there's a ton of people going out there and finding stranded, wasted, isolated energy to mine Bitcoin with. Then obviously you have the industrialization of the mining industry on the demand response side, which is becoming critical to grid systems. And so I think you're going to have, I don't think they're there yet, but I think you will have somewhat price insensitive or less sensitive grid operators that really need it for demand response. Yeah. But let's bring this back. I know we got less than 30 minutes here. Really focusing on the topic of the soul of Bitcoin and what is it? Is it this capital asset? Is it digital capital that is to be used as a collateral asset only to have structured credit products built on top of it? Or is it peer-to-peer digital cash to be used in everyday transactions? I think I'm a believer it can be both. It can get both out of it, but I do think there is, again, this year particularly, I think the fight over the soul of Bitcoin's future, or maybe it's like a perceived fight where you have, because I don't think it really is a fight. Like I said, I think it can and will be used as both, and I actually think it's very productive that this conversation's been, for lack of a better term, hashed out this year, and going back to the juxtaposition of block versus strategy. I think that's actually extremely healthy for the long term. And I've been more focused on how do we make sure that Bitcoin becomes peer-to-peer cash more recently, because I do think it's important. I do think the meme of it's only going to be digital capital, never sell your Bitcoin, never spend your Bitcoin, is completely short-sighted and asinine. And I am really interested to see what the data looks like a year, 2, 3 years from now, post Square opening up Bitcoin capabilities in their point-of-sale systems. And I think the product that they released with the highest signal is probably the automatic conversion of daily revenues to Bitcoin. You can sort of choose the percentage. That's the Bitcoin treasury play I want to see. Small, medium-sized businesses sweeping some cash flows into Bitcoin and holding it on the balance sheet.
Is that a question?
It's just a thought, a jumping off point to jump.
It's a great thought. I have all the thoughts here because, like we talked about, I personally have a hard time chalking all this up like the future of Bitcoin only to be what, the Supreme Court of the United States says. I have a lot of, I can understand the sympathy for, U.S. being the largest economy, largest capital markets, largest military, that there's a lot of reason to believe that sort of whatever the U.S. says to enforce the moneyness of Bitcoin, like that could be the future of it. But due to the fact that it is, unlike gold, where it's not easily confiscatable. And remember, during the first year of World War II, 1940, 80% of the world's gold found its way into the United States, or somewhere around the United States, like Canada, into their coffers. Because this is actually the biggest nail in the coffin of the international gold standard was not Roosevelt during the 1930s. It was Hitler and Stalin during World War II. So, and by the way, we're going back to, as you well know, very unstable geopolitical times, which is a topic for another conversation. But the nature of holding Bitcoin, I think, is way outside of their hands at this point. Like, ETFs still, large amounts are getting there. Anybody can hop on Bitcoin treasuries and see it pretty closely how all of that stuff is tracked. But this is still a, cypherpunk retail, like decentralized phenomenon, and we all want to see it stay that way. So I would say, hold on to that vision no matter all the news that comes out with the economy and interest rates and Wall Street and this and that. We have this power curve. It's the way that networks grow. It's censorship resistant cash with many use cases that you have studied with your guests throughout the years. And as long as, I would say particularly as long as that decentralized nature holds, we're going to be fine. We're going to be fine. But how that would play out as a pricing mechanism, I think that is most interesting. And I really would say that I hope that it continues on this power curve, because the power curve would show you something sustainable. So here, I don't know if I've shown you this before, but this is same thing. Got the old power curve, and we also have an exponential curve. So I've shoehorned in what Bitcoin would look like if it was on an exponential trend. You can clearly see it's not an exponential trend, right? Like, so at the beginning, it wasn't here. And then when it went through the whole mid-cycle of its life, it barely hit this trend line, a little bit here. And then we've been off it since 2022. Not even close. So it's not an exponential trend. The R squared is worse. It's just clearly not. It fits this nice trend. And if Bitcoin would do what a lot of the people that have been clamoring for, I guess, in Wall Street, and if it would just be this sort of base asset where you could collateralize against it and then draw on it, and we just have a bunch of fiat interest around Bitcoin, this trend would not hold. It could not hold. It actually, this is where it would have to be something where like all your models sort of break, but presumably it would break to the upside, but it might not be the world that we want. So to have the world that we want, it would need to be on this sort of a trend line, and we'd have to have just a different credit market, surrounding this. But if we do have Wall Street take over for whatever reason, you might see something like this where it turns exponential, like here. If it happened at the end of the year, it would be more like this trend. Or here, if it happened after 10 years, it'd be more like this. So this is where you could get it maybe go on a straight line, and you get something like this. So still could be crazy numbers. Like if it started to go exponential by the end of this year, and then we go out, 15 years, that's $22 million Bitcoin by, 2040. Exceeds everybody's expectations, well higher than the power curve, by the way. But what's behind that $22 million Bitcoin? Probably loads, mountains and mountains and mountains of fiat interest and government bonds and stable coins and all the rest. Like that's not really a future that people would envision, right? And for you, the statement that you just made about it's only this sort of hodling or investable technology where it's not used in peer-to-peer transactions, that would be more likely under this scenario. Does that make sense?
Yeah.
When it goes exponential, it's going to look more like a Wall Street asset, and that would be, in my opinion, not an ideal scenario. It may still be great for investors, right? Like on that number go up sort of, not even on the number go up ethos, just on paper, it looks good, right? But that's the same thing like Manhattan real estate. It looks good on paper. You can pull out whatever you pull out a year for your expenses and everything, but you still get rolled over more accumulative debt each year. And at some point, that's harder for anybody that's there, unless you have like some major business that can keep ahead of, lots of inflation and economic growth. At some point, that debt for personal balance sheets becomes very difficult, especially in rising interest rate environments. So that's where I sit, basically mathematically, kind of looking at what you said. You could see, $15-20 million Bitcoin in the next 15 years, but in my opinion, that would be too high. Actually, you would want a little bit more sustainable, something along this curve, and compound interest does not work on a power curve. It just doesn't work. So that's the thing that I'm sort of trying to figure out with this. How our time, our work is valued, and how people are going to value Bitcoins. But I would be very careful. I know this is like a booming industry and everybody's loving it, and Saylor himself has accumulated a boatload of Bitcoins doing this. But I would just say, on a personal level, one should be very careful about accumulating too much debt behind their stack of Bitcoin, because you don't want Wall Street to take it, or whoever you're posting the collateral to, especially if you got to, liquidate in a day or less than a day, and all of a sudden your Bitcoin's gone because you were margin called.
Yeah.
So in other words, if you want to see that decentralized future, I think it's got to come from around the world. It's got to come from other currencies.
Well, I think too, the Saylor specifically say never sell your Bitcoin. I'm going to burn my keys when I die. I mean, there's this, I don't know if it's intentional or naive or ignorant, but I mean, the tech around the payments use case is only getting better. And I was thinking that today, like right before we hopped on, it's December 1st, ran Bitcoin payroll for the employees here at TFTC. Accept Bitcoin for part of their salary, and it's always a beautiful experience. It's like, hey, you wake up, I get a Zapprite invoice. Obviously, there's some UX and automation that can be built around this particular use case. I know there's companies working on there, but the way it works here, I get the Zapprite invoice, I pay it, and that person gets that part of their paycheck in Bitcoin within an hour. And
is that monthly or biweekly?
It depends on the particular employee. Yeah. Some are biweekly.
It's a good day for them.
Yeah.
In terms of stats.
Bad day for the business. Good day for them. No, it's a good day for the business. They're happy.
Yeah.
But no, it's always and we've got contractors who do some miscellaneous work, and that's one of the stats or anecdotal data points that has really encouraged me this year, is the amount of contractors that sort of know that we're a Bitcoin company and just send us invoices in Bitcoin. And it's like, okay, this is cool. So to your point about it's going to take sort of retail adoption, I think it's happening. And I think it's only going to accelerate. I'm not sure if you've been paying attention to the developments around ARC and Spark and what's happening with the Xiaomi and Mints, but the payments UX and as it pertains to speed and cost, and then on top of that, privacy benefits, it's only getting better. And if AI really is taking over, which I think, not taking over, but is a thing, I think it's real. I think there's a there. We were talking about it before we started recording. We're both using Claude pretty extensively in our businesses, and it is making us more efficient and allowing us to do more than we could by ourselves and without having to hire full-time employees. If the agentic future materializes, when it materializes, these agents are going to need money, and it doesn't make sense for them to use fiat rails.
Yep, not at all. This is a chart of Japanese yen. We talked about JGBs at the top of the show. This is Japanese yen in Bitcoin. This is not from an exchange, it's triangulated from the dollar with the official exchange rates, but also a power curve, 97% R squared, and 13 million yen for Bitcoin. Even a little bit below trend now. 4 years ago, 5.9 million yen at the peak. All right, so that is a higher multiple ahead for the Japanese 4 years ago holding Bitcoin than it is for us or those who are dollar oriented, say 85K versus 60K 4 years ago, right? So any way you slice this, it's going to be better to hold Bitcoin and also to transact in Bitcoin, get paid in Bitcoin. This is the old message from Andreas, right? So yeah, I mean, anything that can bolster that story, I'm like 100% behind. I know Wall Street's like very exciting in price and everything, but you got to think about what's going to be behind that story. If like you really want Wall Street to be there and like that's the main driver and everything, the only thing that's going to be behind that story is a lot of fiat interest, like a lot. And this chart is basically, telling that story. It's like at some point we're going to start thinking in terms of Satoshis, I know, but basically without showing you too many charts, in 20 years, for sure, we're going to be at the level of the monetary base, which I haven't even talked about this show yet, but that's probably when this drops. There'll be another update for people to see the third quarter of base money, which is really basically flat, even all things considered, still about $26 trillion. So Bitcoin is, less than 10% right now, just like it is. It's actually about the same level of those top 8 tech stocks, by the way. But anyway, the world will certainly understand Bitcoin a lot more in 5 years, a lot more than that in 10 years, 15, 20. Like, it is a compounding technology. But if you want to think about this in terms of like the old traditional TradFi model and sort of model it out a straight line on log scale and do all these ABC, Elliott wave stuff, I'm just telling you, I've been following this for a long time. It does not follow that pattern. It follows a nice sustainable growth rate. And if you want it to follow those sort of old school Wall Street models with a lot of interest baked in, right? There's going to be consequences to that and probably more booms and busts. So I would say that's it's still okay. I mean, if you're holding Bitcoin's going to do well in either scenario, but it's one of these things like, gold bugs, right? And how many gold newsletters I've read, I just can't tell you, but and I talk about this on my show all the time. It's like they sell fear, they sell doom, they sell gloom. They don't really sell hope. And gold miners don't hold the gold. We just talked about this, how it's just going to be a golden Christmas for these guys. They don't care about the gold. They want to get it off their books as quick as they can, sell it, lock in the profits, move on to the next thing. It's not part of their underlying, worldview, but that's not the case for Bitcoin. So there's just so many different things in Bitcoin that are going to affect the relative growth of the network. So many political things, geopolitical things, technological things, privacy things that just no other asset can compete with. I really think people got to be, thinking about those things more. And yeah, it all comes back to the sort of, as you were talking about, using this on a day-to-day basis. If you're only about number go up or thinking about this as like some exponential asset that's going to do better than, whatever, there's going to be a real big consequence to that if like Wall Street comes in and just loads up a ton of debt and fiat interest behind it. It's just exponential growth for Bitcoin would be, based on the numbers, it would start to look rough. It would start to look unsustainable. And so that's what I'm trying to show with these charts is like Bitcoin by its nature, very interestingly, is not following the growth trajectory of any other asset. And that's a good thing. People should try to understand that, pay attention to that. And, take comfort in that because, 20 years up, 10 years up for a gold bear, then 20 years down, then 10 years sideways. That's not a
It's no way to go
future.
through life.
It's no way to go through life. And just it's so fascinating to go back and read some of these gold newsletters, like these old ones, and then don't even get me started about some of the types of people that some of these people are. And there's just some crazies out there in a lot of this speculative political space and hard asset space. And a lot of them have just been wrong about gold, like completely wrong. So don't hitch your wagon to Wall Street or I don't know, just a lot of the hype around that. Yeah, it's going to drive demand, sure. But I would highly caution about too much debt for you personally around your Bitcoin or in anything. But Bitcoin, if it all goes according to the power curve, debt is going to look completely different in the future. It's just not, there's just too, this is an oxymoron sort of, there is so little Satoshis to back more and more and more fiat interest. You'll just have to have a different concept of future value, and giving up those Satoshis for rates of interest, which probably aren't going to pay.
Yeah. Bitcoin, it's a better way to go through life. Yeah, it is funny. Thinking about this, that's, again, not blowing smoke up your ass. I always love catching up with you quarterly because, as you mentioned, I find much more comfort in where we are. I think it's inevitable to succumb to the animal spirits and the sentiment that is fire hosed your way via social media. And if you look at
YouTube thumbnails,
you gotta play the game. It's all ending. We'll have a good one for this. It'll be a burning background and
the Elmo.
Yeah. But honestly, if you're out there relatively new or seasoned and haven't yet internalized that Bitcoin is exhibiting power trend adoption, it's riding this power curve. And if you just look at the data, the back-tested data, going back to Bitcoin's inception, we are lower. We're below trend, but we've been at this point for 30% of Bitcoin's life in relation to where the trend actually is. So
yeah, and we're closer than other relationships. Just quickly as we close it, here's Plan B's 2019 model. This might look kind of close, but on log space, if you actually look at the numbers, right? So he's at 770,000 right now. Power curve's 120. His is 770. His 2020 model, more absurd, 6 million. And then you can do a power trend. So, again, bottom line, without going through the math, these are incorrect because they assume exponential. There's an exponential component to this. He's using gold, silver, all sorts of other nonsensical things. There's an exponential component, which Bitcoin doesn't do, so they're wrong. Bitcoin is a power curve. You can sort of shoehorn in a little bit a better one, like I do, not using these exponential components. Again, not to be too long-winded, it's a little bit better, but there's no predictability to it, or let's say stability, comfort to it. So, for example, if you see my number here, the sort of lighter green shaded one, power trend on stock to flow, 350K. That would be if you didn't assume any other weird things like Plan B did, and to just leave it at that. But still, if I had only taken the 2016 data and projected out on that way, I would have got this red line. Let's look at the difference. 350 between 584. Again, you're still 200,000 off. So the 2016, the dotted line, showed no predictive. And when I say predictive, I don't mean like I can predict the future. It means it's statistical. It's showing, it's like, is this medicine going to work? There's no sort of prescriptive, predictive in a statistical turn sort of relationship there. But now let's look at, here's the power curve, 120K. What if we took the power curve from 2016, projected forward, and didn't do anything else from 2017, 18, 19, 2021, 22, 23, 24, 25? Wow. That is the 2016 number. 128,000. So if you don't if you're not on board with this, again, I don't even care. I'm not I don't care for the if I found it first or if I didn't. It's just a formula. It's not a big deal. But you need to look into what this actually means, how it's displaying the growth of Bitcoin, and no other market looks like this. Other markets are these straight line on log scale or bastardized stock to flow things, which are they're not jiving with the way that Bitcoin grows. And so we can see power curves on address growth, hash rate growth, nodes, a lot of different things with Bitcoin. It makes sense. It's a network. So it makes sense that it's growing this way. So to understand how the thing grows, which it does in fact slow down a little bit every year, it grows sustainably, that's going to give you more comfort, in my opinion, over the end. And if it just becomes this savings asset, like you said, which is in some level naive or not good. Yeah, it might look good on a price level, but there's going to be a lot of fiat units that are baked into this number 8 here. And even though it might look really, really good after 20 years, maybe $30 million Bitcoin, you're going to have like $10,000 gasoline or whatever. I mean, it's just going to be absurd. It's not going to be a future that anybody's going to want. So that's the fight. That's the fight. And to do that, you need to keep it decentralized. You need to use it, spend it, like you said, all the things we talked about. So I'll leave it there with that, my friend.
Thank you for comforting us during these trying times.
I do what I can.
It's always
we have bigger issues over here in Eastern Europe, as you know. I abstained from bringing those up during your show, so I'm sure listeners will appreciate that.
Maybe we'll catch up on it next time.
Yeah, I'm happy to.
Beginning of February next year. It's actually a timely turnaround.
Yeah, it's about time. 2 months after.
Yeah.
But it's like you said, there's more stuff happening behind the scenes, and I'm hoping to not just be quarterly after the end of this year, but maybe we'll get some more rolling, better updates. Not that you and I have to do it every month, but money supply is it's a backward looking thing. Do not look at M2 retail money supply in the United States and think it's going to predict the price of Bitcoin 11 weeks from now. It's just not doing that.
No. Not a good way.
Have comfort in the power curve, the network effect, and spend time with your family.
Yeah, spend time with your family, and if you're really worried about it, do your part to expand the network effect by educating people about Bitcoin, helping them download a Bitcoin wallet, and teaching them how to receive and send Bitcoin. Do your part. Matthew.
Nice.
Enjoy your night. Enjoy your Christmas and the New Year, and we'll catch up in 2026.
Thank you, my friend. Always a pleasure.
Peace and love, freaks. Thank you for listening to this episode of TFTC. If you've made it this far, I imagine you got some value out of the episode. If so, please share it far and wide with your friends and family. We're looking to get the word out there. Also, wherever you're listening, whether that's YouTube, Apple, Spotify, make sure you like and subscribe to the show. And if you can leave a rating on the podcasting platforms, that goes a long way. Last but not least, if you want to get these episodes a day early and ad-free, make sure you download the Fountain podcasting app. You can go to fountain.fm to find that. $5 a month gets you every episode a day early, ad-free. Helps the show, gives you incredible value. So please consider subscribing via Fountain as well. Thank you for your time. And until next time.